Hello there, my fellow investors, and welcome to the Dividend Master channel. Okay, so today we're going to look at, for our first stock, PepsiCo. Okay, so PepsiCo, one of my favourite stocks to invest in. I've been invested in them about a year ago. So when they were at, did they get to? They got to $127. I've just held them because gone down because of the coronavirus outbreak. They got to $103. That would have been a good time to buy, but I didn't want to invest any more money into them at that time. So if we look at their 5 year, they've been up to $142. They're down at $123 at the moment, and their dividend yield is 3.23%. So, pretty good yield for this company. Okay, so if we go on their analysis, we go down to growth estimates. I'd really recommend Yahoo Finance. It's a good website, shows you all of the statistics. So we've got it's expected to grow 5.6% in the next 5 years, which is a pretty good growth rate. And the next year, they're expected to grow by 8%. In the current year, they've been growing by 4.5%. The analysts at Yahoo have recommended Pepsi as a buy at the moment, and they've said their low is $115, average $140, and high $160. I think they will exceed $160 within the next couple of years, maybe 5 years. I would say 5 years actually. Okay, so if we go on the brands they own quite a few. You would have heard of most of them, I think. So Walkers, Quaker, Doritos, Snacker Jacks. I'm not sure. I haven't really heard of these three yet, but I don't know. I don't live in America, so anybody in America might know. So if we go on to beverages, we obviously have the Pepsi drink, Tropicana, which everyone would have heard of, 7-Up. Not sure if I'm allowed to say this one in the YouTube video because it might get banned, but yeah. Gatorade, Mountain Dew, Lipton, Lavazza. Haven't heard of these two yet. Okay, so that's our first one, Pepsi, which I would recommend as a buy now since they're so low. And if you look at the profile at the moment, we've got these people, they're very good at managing companies because I've researched some of them in the background. This, you can see they're getting paid a lot, 6.2 million. Okay, so if we go on to Shell, this is a riskier investment company to invest in because they're an oil company, and if you've heard about the argument between the Russians and the Saudis of what price oil should be at now, that's why it's dropped so much. The share price, they've got a 10.24% dividend yield, which is pretty big. So that was the reason that I would say to invest in, because of the dividend yield. But if we look at their 6 months graph, they've been at £22, £23 there. And in the last year, they've got to £26, which is good from what they're at now. They're at about £15 now. And their P ratio is 7.77, which is not bad. Earnings per share is 195, which is quite good. Okay, so if we go on analysis, we will see. Okay, Yahoo, not the best. I was praising them up, but they haven't delivered this time. Okay, so we can't look at that. But if we look at their news at the moment, Goldman Sachs have said that Shell and BP, the two oil companies, they have said that they will pay their dividends and keep the dividend at the same price, which I think they will because they're a massive company. I think the virus will be over in July, I'd say. Finished by July, maybe a couple of cases around the world. But I think they will maintain the dividends they're paying, and so that's good. And they fell. Where was it? They fell down. They were at on the 30th. They were down here near £12. I was going to invest at that point, but hesitated, which I shouldn't have, because I think they will keep on rising, even though they're down by 0.64%, which isn't much. I think they'll keep on rising and they'll get back up to this price after the virus is gone. Okay, so if we go on to JP Morgan, Warren Buffett has recently bought them, not really recent, but in 2018, because he likes to hold his stocks for a long time. He bought them in 2018, and I mean their dividend yield 4.27%, not bad for a company like this. They're at $87 at the moment. Their 52-week range, their lowest has been $76 and the highest $141, which is not bad. If we look at their analysis, if we go back to the growth estimates, we see next 5 years 4.96% increase, nearly 5%. In the past 5 years, they've grown by 15%, which is a big amount. But this year they've gone down by 12.6% in their growth, and they're near their lowest at the moment. Well, Yahoo says their low is $77. The average is $123, so I would say that's a good investment now. Yahoo recommend it as a buy. Okay, so if we look at their P ratio, not bad, 8.16. And their earnings per share, EPS, 10.72, which isn't bad. Let's have a look. Okay, we've looked at their 52-week range. So on to the next one. We've got Legal & General. This is a bit of a riskier one, I'd say, but they're quite stable at the moment. But they've been down in the last couple of days. I mean, 7.6%. They're a financial company. They do insurance and things in the UK. And I think they've gone down because shareholders have sold the shares after in the last few days or the last month, because they paid their dividends on the 4th of March, I think. I'm not sure. I think it was the 4th of March. Before, not 100% sure, you have to look it up, but the earnings per share, they've got 30.7, which is pretty good. P ratio 5.28. I mean, it's not the best 5.7, but it's pretty good for these in general. But if we look at their dividend yield, they've got 10.24% dividend yield, which is really good at the moment. So on their 52-week range, the lowest has been 117. If I was going to invest, I'd probably wait for them to get below 150, so £1.50 I'd recommend. And their low has been 117, £1.17, and high has been 324, so 324. So if we could see after the virus, I think we'll see an increase back up to around here, to £2.90, £2.70, £2.80, £3 around there. And if we look at their analysis, growth estimates go down. We see 4.63% in the next 5 years, which isn't bad. And if we see Yahoo have said their low has been £2.25, but look at them now, shot down like a rocket. They rocketed down. At £1.62, and their low, Yahoo have said, is £2.25, and the high is £3.32. And Yahoo said strong buy, a couple of people, well, I don't know, and then a buy, hold, and underperforming. I wouldn't say, I looked at their results, I wouldn't say they're underperforming, but they're not doing the best they could be at the moment, but they're not doing bad. Okay, so if we look at our last one for this video, we look at Wells Fargo. Warren Buffett invested in them when he was younger. I think it was 1980, around that time, when he started Berkshire Hathaway, and they were doing really well. So at $27 at the moment. They've got a growth estimate of 8.38%, which is really good for the next 5 years, and 14.8% for the next year, which is really good. Current year, their growth has gone down by 18.5%, just because of this virus, I think. Who are recommending to hold if you've already bought shares in them, and not to buy or not to sell at the moment. And they're near their low, the average $40. So if we go into the summary, the main page, we see their earnings per share is 4.05, which is pretty good, and their P ratio is 6.72, which isn't bad. And we see their dividend yield is 7.68%, which is quite big for this company. And they say they're undervalued. Yeah, who say? And their 52-week low has been $25, 52-week high $54. So not looking too bad. So I would say that would be a buy at the moment. Okay, so if we go on to Guru Focus, we look at Warren Buffett's portfolio. We see he's added to his stake in JP Morgan at the moment he's put it 0.77% in more. And Wells Fargo, he's reduced at the moment, so I think he's taken some of his stake out of them at the moment, but he'll stick with them. And if we look, Delta Airlines, I didn't mention them. I think they've got a pretty good dividend. If we look at their dividend, hang on, Delta, oh my spelling isn't the best. Delta Airlines share price. If we go on to Yahoo, see their dividend. Oh, they don't. I thought they had a dividend yield, but they don't. So they've gone down a lot. If you look at them, for what they were at, $61, and they're down to $22. So Warren Buffett's gone and added to his stake in them at the moment. He's added to Goldman Sachs. This was in 2018 though, so quite a while ago. I haven't got the premium, so I can't get the real time. So, and if we look at his sector weightings, we see got 45% of financial services, 23% technology, which has been more recent because he didn't really get into technology when it first started emerging. He bought it after, but he bought Apple and then he trebled his money. When Apple, people said they were high, but they carried on going up and up and up. Right, we've got energy, basic materials, real estate. I think that is going to grow. Industrials, 5%. He likes his banks. He's invested in the Bank of America. He's invested a lot of money into that. With him and Charlie Munger, with Berkshire Hathaway. So we've looked at Warren Buffett's portfolio, the top 5 dividend stocks and stocks that I think you should buy. Okay, thanks for watching, and make sure you watch the next video, like and subscribe. Okay, see you guys.